Okay, so let's get the next conversation going, and we're inviting Ekta in for this one as well because it's a very important conversation from the pharmaceutical space. The Lupin stock has been under some pressure. It's trading about 25% off its 52-week highs. The company has reported 7 observations handed out to the Goa plant. There are also some concerns on the US pricing pressure, how the US market is shaping up. And the big trigger for the company, of course, is the fact that they're looking at the diagnostics entry. Ramesh Swaminathan, ED and Global CFO of Lupin, is joining in. Ramesh, good morning. Thanks for being with us. Season's greetings to you, first of all. I'm going to start with the last bit first. Please tell us what the thought process is behind getting into diagnostics. I mean, we've been having a lot of discussions with the incumbent players about whether it's getting too crowded and whether the online of the advent of the online segment, whether this space is set for a lot of disruption.
Thank you for asking me that question. But let me tell you, yes, we have got into diagnostics. As you very rightly said, it is actually a business which is hugely fragmented. The organized sector is only about 16%. So there is tremendous room for growth from our perspective. But as organizational development go, we would like to see ourselves beyond, in fact, at some point beyond, just the pharmaceutical space, and we'd like to be seen as a healthcare organization. From that perspective, it is strategic, but we are taking baby steps in this direction. We know the risk associated with it, so we are calibrated the regression on this space.
Okay. Ramesh, hi, this is Ekta. This probably also ties into the fact that you approved entering into digital healthcare in the month of June as well. So what is the larger idea for Lupin when it comes to 1, diagnostics and 2, healthcare? Are you looking to become a digital aggregator with diagnostics as a part of it? Are you looking to set up hospitals?
No, we're not going to certainly get into hospitals. But we are, as I was saying, it is a strategic move. We do see that there is tremendous growth when it comes to, in fact, digital strategies and the like, and that is the reason we are getting into that. We see it as a very useful adjacency, so to speak. And a lot of companies, even outside, are moving beyond the pill. We're just following, we are in in that mode in terms of going beyond pharma. So it is in the right direction. But as I said before, it's going to be extremely calibrated. There's not going to be any risk that we're going to take on this, and very, very measured in what we're trying to do.
Ramesh, a lot of investors and analysts that I've spoken to, one of the concerns from them is that why is Lupin now looking at healthcare in India? Why is Lupin looking at diagnostics when you have a lot of things to focus on within the pharmaceutical space? It's the Goa observations, it's your US FDA concerns on other plants, US pricing pressure, growth in the domestic formulations business where that COVID-19 tailwind is not there anymore. Why now?
And Ramesh, if I could just supplement Ekta's question with exactly this, can you explain the capital allocation plan? For every incremental 100 rupees that you're going to spend, I mean, how much is going to come to the base business, where there are the concerns that Ekta pointed out, and how much money are you going to deploy in this fresh business?
So too many questions being asked in the same breath. But as I said, it's going to be calibrated. There's going to be small steps in that direction. The capital allocated for this is going to be marginal at this stage. On your other question being, why are you trying to get into this when you have a host of other problems to solve? We are actually, looking at all of that as well. The U.S. outlook, the India, the way things are moving out. Then, of course, the FDA observations at various plants. We do believe that all of these are addressable within the next foreseeable space, so to speak. And what we are trying to do in the others are essentially looking at the long term. It's a long-term vision, so to speak. But at the same time, we are calibrated about our capital allocation policies. We know that we have actually gone already when it comes to M&A. So to the extent once bitten, twice shy. So we are conscious of that as well. So I would not like to say anything beyond the fact that it is going to be reasonable allocation and nothing is going to be in the region of stupendous.
Okay, so just to wrap up this diagnostics, argument, because I mean the street is very interested there, Ramesh. I'm sure there'll be a lot of efforts into brand building. There is price competition as well in this sector, as Ekta was just referring to. So in the very near term, should we expect some pressure on margins for the overall business as you look into entering diagnostics? or not quite?
Not necessarily because of this foray into anything, but the fact is, there is margin pressure in this industry in a general sense. And the least of this is essentially the worry coming in from fresh circles in China. As you would know, in China, there is, of course, this issues concerning supplies from there. So there is going to be some pressures coming in from that quarter and so on. So there's no dearth of problems on other things as well. But having said that, as I said, we are contending this for the long term.
Okay. Ramesh, good morning. In last quarter, every large pharma company spoke about the pricing pressure in the US. How have the trends evolved, and is this going to now remain a bit of a problem for next few quarters?
If you see, there was tremendous pressure about a couple of years ago, essentially because of channel consolidation. And after that, we saw a period where things were steady. The first quarter did see some pressure coming up, essentially when it comes to specific molecules. You can't take the same brush and kind of paint the entire portfolio with it. In a general sense, there was time, but it's kind of stabilizing again. It's in the high, single-digit numbers, so to speak. But if you look at secular trends, I think it will be about 5 to 6%. It will settle down at that rate. So yes, there is pressure if you do talk about it. But I think it's also something which is, it's cyclical in some ways, and it will settle down.
Okay. Just on the point with regards to the US markets, Ramesh, any clarity in terms of a launch of the inhaler Spiriva generic, as well as what are you anticipating in terms of the launch pipeline for the US and for the Goa plant itself, the 7 observations? Are you confident of maybe getting that warning letter lifted, and your outlook on the other plants as well?
I think these are good questions to ask. When it comes to, in fact, the U.S. markets, our outlook for that market is indeed pretty good. Talking about, in fact, the new products, we have quite a few lined up at least for the next year. I'm talking about actually these which have already been filed. I wouldn't, as you know, we are working on a number of platforms, speaking about inhalation, biosimilars, and of course complex injectables. But let me restrict my talk to those things that we have actually filed. So to the extent, yes, Suprep is something which we think we would be launching in the second half of the next fiscal. We also have products like PEG GCSF, where we do believe that we have a very strong go-to-market strategy. We have Suprep coming in America. So they are pretty decent products lined up. The other questions related to, in fact, the observations. So speaking about, beginning of this year, we had Somerset. There were a number of observations, but 3 of these figured in the warning letter, and these do say cleaning up of equipment, things leading to continuous improvement. When it comes to batch-to-batch variability, things leading to structure and organizational design of the quality function and the like. We believe that all of these are hugely addressable when it comes to Somerset. We are working with the agency. I don't want to set a timeline for its remedial, but it will certainly happen. Goa, I think the observations we are speaking about, the good thing is there was no repeat observation, and I think it's highly addressable. We remain hugely optimistic in so far as Goa is concerned. Tarampur and Pithampur, I think ready for inspection. The remedial action is in place, and I think it's a question of time before they get inspected as well. Mandideep, for us, fortunately, there is no pending product approval from there, so that's quite okay. Though of course we are in a state of readiness as well. So from our perspective, I think things are we're working very hard to address all of this. The third question related to to margins itself. Yeah. You've been working on, in fact, a host of things for the last several years. That's why you found the gross margins to be quite steady.
But Ramesh, I just want to come in on that, because we just had a conversation with Suven where they've mentioned that input costs have risen substantially. That's what even Glenmark Life told us yesterday. That's from the API front. But is it now affecting your value chain as well?
Yes, for sure. There has been some cost pressure when it comes to procurement. Yes, there has been, and I guess there is more disruption in the wake in terms of, as I was mentioning at the beginning of this interview, we have this China disrupting factor. A lot of our KSMs are brought in from China, and that would mean it could be given their own issues, shortages on various KSMs, so to speak, and it will certainly impact in some ways some pricing as well going forward. But there is some pressure. That would have stabilized the normal course in Q3 or Q4 for sure. But this new start of this issue with KSMs from China could put the additional headwinds there.
Ramesh, I remember an interview we did about, I think, 2 or 3 years back. I think Anuj might remember that as well. This was in our old studios. And you remember, I remember you telling us that the next 2 years will be years of consolidation for Lupin. And FY22 onwards is when the growth should really start firing up and show in the numbers. Of course, 2 years we've had a pandemic in the midst of all this. But you tell us, given what you said about the pricing pressure in the US market, your own launch pipeline, now you're getting into diagnostics. What should your investors look out for? What is a reasonable CAGR growth rate that you can deliver, say, over the next 1 to 2 years? When does the growth kick in?
You correctly mentioned the fact that we are into some kind of consolidation phase. We've been at it in terms of trying to work on various operational excellence measures, which includes procurement excellence, route to synthesis, and of course our entire digital strategies. And there is good work happening on that. There, of course, have been several other moving parts which are bucked against us. The COVID for sure. So essentially, in terms of addressing the FDA-related issues, there has been some time lag. And of course, because of that, we're not able to launch a host of products that we had lined up for in the US. So all of these we were contending, and that is the reason perhaps margins didn't move the way we expected it to move. But this endeavor is still on. We are, of course, restructuring going forward also. For example, we are trying to restructure the entire specialty business because, as you know, it was losing tons of money in America. We are trying to spin off, in fact, our NCE molecules. I think there is tremendous value there. We'd also like to unleash value from biosimilars and all of that. So a lot of issues happening. Some of these are proceeding at a pace which is essentially because of COVID-related times and the ability to reach out to people and so on. But for sure, we are in the phase of restructuring that we just spoke about. And we still remain confident about the future, the pipeline, our abilities, our confidence. In fact, our platforms that you're working on will all come to bear in the quarters to come. And I think 22-23, we'll land some good products. We already have Albuterol, which is also in the process of ramping up. Quite a few products on the OSD front, given our rich pipeline. Unfortunately, not able to bring it to market because of various issues. And again, we're still working on a very rich pipeline for the future.
Sure. Just one final question then, Ramesh, because there are rumors floating around about some kind of promoter stake sale, promoters exiting. Anything on the cards at all?
Let me squash it right away. There's nothing of that kind. It's all despicable rumors at that stage. That's what I would like to say.
Okay, well, coming straight from the horse's mouth. Thanks a lot, Ramesh, for clarifying that for us. And thanks, Ekta, for joining in as well. By the way, it is a CNBC Newsbreak confirmed. Remember, Ekta was the first to tell you that Lupin would be entering the diagnostics business, and now the management has confirmed it for us. So, well, you hear it first on CNBC TV18.
Okay, before we take a break, I just want to